Good morning and happy Saturday. Welcome back to another live with Real Estate Mindset. We have a huge live plan for you guys today. And let us know if you want us to do this on Saturday. Personally, I'm kind of liking this Saturday, Mitch. It feels like we are not being rushed right now and we can break down the entire week of the market without that rush. So I'm really happy about it. Now, as you guys remember, we are going through the Amicus. Each live we're doing 2 lives per week for about a month. And during the segments, in between the segments, we're going to read part of the amicus brief that Mitch made for you guys and that Mitch is using to abolish property taxes. Now, remember, you guys, the reason why we're doing that is to gain support over what we're doing and then also to create understanding of what's going on. And during this presentation, when we go through the housing market, I'm going to show you guys absolutely mind-blowing things that are happening right now within the school districts, and they're passing this debt and fraud on to the taxpayers. So we'll go over that. A lot of stuff today. No rush, but before I do, I wanted to say good morning to Cheryl. Wanted to say good morning to Austin in his name. There's my buddy P. Nice as well. Stephen, good morning. Chris, good morning. Really nice to see you guys on a early morning Saturday. Mitch Vexler, you're muted, but after you're unmuted, how are you, sir?
Fine. Like you said, it's a nice Saturday morning. The weather's all good for a change. Not too hot at the moment. It's all good.
Yes, sir. Not too hot at all. So I want you guys to know as well that are watching this, everything's going to be linked in this video, so you can come back here because it's going to be a little bit longer of a video and you can target whatever you guys want to dig into and research because there's going to be a lot. But the very first thing I do is on our second live a week, we're going to go over the weekly totals for some of the assets. So let's start our market update right now. I'm going to do our first timestamp at 1 minute and 45 seconds. And let's start with the NASDAQ. And let's see, what do I want? What picture do I want to use, Mitch? What picture am I going to? I'm going to use this one right here. All right, so a few things I want you guys to pay attention to real quick, and give me your, keep talking in the comment section, ask some questions. We will try to get to that. So what we're going to look at is the 1 week. Okay, so we're going to look at the last week and we're going to compare the stock market. We're going to look at crypto. We're going to look at metals and see which of these performed the best, starting with the NASDAQ, which, by the way, you guys closed on Friday at 22,631. But I'm more interested in the gains. So the 5-day gain is 2.21% for the NASDAQ. That's going to be close to the winner for this week. Okay, so just remember the 2.21 for NASDAQ. When we look at the Dow, first of all, the Dow closed at, let's see, 46,315. So it ended up about 0.37%, but it finished the week up 1%. So all that commotion about the stock market and the Dow, right? It's up 1%. A lot of drama for that 1%, but hey, it's still a yield. Now let's look at the S&P. The S&P is up over 5 days, 1.22%. So of the three indexes, obviously the NASDAQ did the best this week. S&P closing at 60. I don't even want to say that number right there. That is a bad number, but 6,670, we'll say. That way I don't have to say the 3 6s there. All right, so let's keep going to look at gold. Gold has been on a tear, absolute tear. And if you guys have been investing in metals, you guys know that I've recently started investing in metals, especially if you have a down payment saved for a house. My God, I have made a fair amount of money on my silver, and my down payment's higher now. So the down payment that I was saving for my house, I bought some silver with that, guys. But either way, gold is at $3,719. Over the week, it's up 1%. So gold this week did not outperform the market. Not this week. 1 year, 100% it did, but not over the week. Let's take a look at silver. Silver did outperform the market, but only because on Friday, you guys, yesterday, silver exploded. Absolutely exploded on Friday, because at the start of the day on Friday, it was actually down for the week about a quarter. So let's see here. So yeah, you can see here it ended up silver ended. Geez, this is insane. $43.36, up almost 3%. And this is what I'm doing, guys. Let's show you. So I like to buy these right here. Okay. I don't know if you can see that. Can they see that? Kind of see that? Right there. This is called a silver round. This is a 1 ounce silver round, and I like it because it's cheap. Well, it's getting more expensive, but it's cheap. So you don't have to buy a whole bunch of silver. I'm just doing a little bit at a time, I like the silver rounds. And then because I have children, I'm teaching my children about how money works. So currently my daughter's in the process of earning 10 silver coins, because again, I wanted to know how money works in fiat currency. So she has 7 of the 10. Now, when she gets 10 coins, we're starting a new family business. We're going to bring it to you guys, and hopefully you guys will support it, and it will be ran by my 10-year-old daughter. But silver's at 43.36. My goodness. Let's look at XRP. XRP, big time loser this week. XRP is. So XRP, not, by the way, you guys, so far of the indexes I just went over, silver is winning. By the way, XRP down 5.66% for the week, sitting at $2.99. Let's look at Bitcoin. Bitcoin actually sideways, up 0.02 over the 7-day period, sitting at almost right under $116,000. Now, when we look at the volatility of the market, I mean, there's nothing there. I mean, the VIX is at $15.45. The crazy thing about the VIX, you guys, and this is why data manipulation is so bad. They use this on your screen, this VIX, for algorithms. So if they keep that VIX low, the algorithms are going to continue to purchase stocks and continue to do what the algorithms do in the stock market. When this skyrockets up, it affects what? The algorithms. This is not our data. Unless we're day traders or we're trading the stock market, who cares, right? But regardless, it's at $15. It's not going to help us, but I just wanted to show you that. And the dollar continues to lose value, but not at the rate that is needed to create a complete crash. The dollar, or Dixie, right now is at $97.67. And what I'm going to do, let me show you guys the max on the Dixie, because it is low. Okay, the Dixie is low, it is going down, but I wanted to go back here to 2013. So this whole time frame here, 2013, 2014, 2012, 2011, look at the Dixie, look at the price of the Dixie. The Dixie is in the 70s and 80s. And I'm telling you that because you have to ask yourself the question, does the government have the ability to continue to drown us in debt? Does the government have the ability to continue to prop up prices in the housing market and the stock market? And that answer is definitely yes, they have the ability. Now, in turn, that will continue to bankrupt America. So we're starting to understand that. But do they have the ability? Yeah, they do have the ability, unfortunately, and that's absolutely sucks. Now, here's the reverse repo market. This has only got 11 billion. I don't know if I think this is close to a record low from when it was obviously from 2021, right? But it's at 11 billion right now. So a lot of money being moved out of the reverse repo market, but the reverse repo market, as we've been telling you guys, is just another mechanism that is created to help the banks. Now, before we listen to our next video, we're going to listen to a quick video of economic indicators. But did you want to respond on any of the things that I just went over, Mitch? And can you try to tell us, moving into this coming week, okay, so this coming week, anything we should be investing in, and any reaction over the last week on the market? What did you see? What did you think?
No, the market was extremely sideways. It's been like that now almost 2 weeks. So even for an intraday trader, basically your job intraday is about the length of 1 hour. When the market is truly moving with heavy volume, that's when an intraday trader can make money. If a person is trading options and they're delta neutral, coming off of a run up, so the volatility is to the upside, they could be delta neutral in this market, sit here for the last 2 weeks, and they would make what's called theta decay, which is time value of the money decay. They're delta neutral. They don't really care which way the market is going as long as it's basically flat. So somebody who's delta neutral did well. Somebody who goes to work as a trader intraday for about an hour a day can make a lot of money real quick, but you don't want to give it back. So when the market goes flat, you're done, which gives you that 1 hour window. So very difficult market. If people say, well, I'm going to invest in NVIDIA in the last 2 weeks, yeah, that didn't work. So everything is based on timing. And the idea of the currency, what Travis had mentioned with regard to the precious metals, one thing everybody should keep in mind, currency is nothing more than a piece of paper that is based on credibility. The problem is that the US government, its credibility is shot because of the Federal Reserve. So the Federal Reserve printed, give or take, $26 trillion in the last 5 years. That 26 trillion is what has created the inflation that everybody is feeling. The inflation is a hidden tax. So you have these people say, well, we've got these digital coins, these cryptos. These cryptos aren't worth anything. They're not going to be worth anything until they're backed by a hard asset. Why? Because the US currency itself is in question at the moment. Its credibility is in question, and it's not being done by foreign governments. It's being done by our own government. And what makes anybody think whatsoever that if the US government destroys the credibility of the US dollar by virtue of the inflation, that they can't do it on a Bitcoin or a stable coin or a crypto coin? It doesn't matter. It's about credibility. That's the number one job of the government right now, is to restore the credibility and save the US dollar. All these other things are just hyperbolic propaganda. It's not backed by an asset. Well, what's an asset? What's currency? It's precious metals. That's the point of all this.
I mean, I get it because the dollar is the world currency, but the crisis of confidence should first be fixed at home before they fix it in the world, because they're absolutely destroying us right now. P. Nice has an interesting comment, and I didn't look too much into this. You may have read some articles on this, Mitch, but they're asking, what do you think about the talks, and maybe it's just propaganda BS, probably, but the talks of merging the Treasury with the Fed? How independent is that? That doesn't sound very independent to me. It just sounds like slushing of funds and debt. But what do you think about that? And did you read anything about that?
Yeah.
You took seriously?
Yeah. It's been discussion for a long time, because the Federal Reserve claims autonomy. They claim, well, we're not connected to the government, which is utter nonsense. And I'm a huge proponent, jumping up and down constantly, that the Federal Reserve needs to be closed. I understand why people believe that it helps issues, but the truth is it doesn't. It's never been on the right side of a decision since its invention. And that's been proven time and time again. The ramifications of the existence of the Federal Reserve, like I just said, is the fraud in the system. It's the hyper fraud that you're seeing in real estate, it's in prices, and it's 100% a direct result of printing money. Printing money is called counterfeiting. It's fraud, right? If it's not backed by an asset, it's fraud. Well, then they say, well, the Fed didn't print the money, the Treasury did. Yeah, left hand, right hand, kabuki theater. If you put two of them together, you have twice as much of a problem, because you can't see it, you can't track it. And as you know, we've been complaining nonstop that the numbers that are coming out on all these indicators from the Fed itself are absolute garbage. The CPI, one giant lie. So putting them together doesn't solve the problem. The truth of the matter is they need to be destroyed, including the US Treasury. It's got to be from top down. You can say, well, we need a Treasury. Yes, absolutely. You have a Treasury, but a Treasury that is completely transparent to the public, just like we're saying here in the state of Texas, that the state comptroller needs to be completely transparent. You've got to have a check register all the way down to the individual school. Who got the money? The problem right now with the U.S. government, you can't see it, and you can't see it at the state level either. So,
well, actually, we can at the grocery store. We can see that. We can see that by the videos on TikTok and all of the people that are struggling. And
well,
the thing that
the
ramifications. Well, that's what I'm looking at. I'm looking at the end result here. Is it effective? What's happening? Who cares about all the nonsense? And the situation is either print money or tax us. If you're going to print money, then you can't tax us. If you're going to tax us, you can't print money. It doesn't work. You're killing us by printing money and taxing us at the same time, because you don't even need to tax us. If you're going to print money and your taxes, you're keeping us in the ground. Ease up on the taxes, especially property tax. And real quick to Fuzzy Bogger. I don't even know. This is probably a fake bot. I like your logo. We all demand property tax refunds, not only abolished, but refunds. That money is spent, brother. That money is gone. They have spent all your money that they've taken to you. They do not have that to refund to you unless what? They print money. That's what I'm saying. So don't tax us. It's just fine. Do what you want. And then also I wanted to give a shout out. You guys see in the background, it says property tax on top, abolish ad valorem. This is the logo for our Facebook group. So if you guys want to continue to talk after this video, go to the Facebook group, Abolish Ad Valorem, Property Taxes, Horse Barn, Texas. That's where we go to talk about abolishing property taxes, specifically in Texas. And by gosh, I have found, I may show you guys if we have time today, but I was arguing with the mayor and the board of trustee in Salina City. And what this guy said, what the mayor said to me to try to sell me on bonds, it's absolute atrocity. These guys need to be locked up. I'll show you guys that in a minute. But let's go to our video of the economic indicators.
Just before you go, that comment is interesting. About
which one?
The refunds.
Why? Yeah, why?
Well, it turns out it's important that everybody understand why I have said that the state of Texas bond program is insolvent. Do you know that there's $57 billion in that program? But that $57 billion doesn't cover off 8% of the outstanding total cumulative existing bonds today. Now, the idea of the refunds, that bond program isn't there to back the bondholders. It's there to back the people who paid into the bonds. Who paid into the bonds? Mom and pop. So de facto, either way you look at it, if mom and pop are successful through what we're doing now, through the demands that we're making through the legal system, well, the bond program for the state of Texas is insolvent that way. So those refunds, in essence, would come from the bond program. Not enough to pay off anybody. If $57 billion is a lot of money.
Yeah,
compared to the $606 billion, give or take, that they've run up, it's a spit in the ocean.
That's the point, right? Yeah, it's 57. It's a lot, but the fraud is way more. Yeah. And I'm gonna hopefully we'll have time, but I'll show the viewers where we might have found some of the off-balance sheet bonds, which is in the election notices that the ISD send out. I don't know if it's their Achilles heel, but I'll show you guys this in a minute. They have substantially more bond debt listed on the notices versus the tracking companies like the Texas BRB. I'll show you guys this. This is absolute criminal what's going on. But let's listen to this video. You guys let me know that the audio is okay. Let me change my timestamp right quick. This is, and honestly, I don't even want to play this video, but it's important that we understand what mainstream media is telling these people, because it's all sunshine and rainbows. Let me know if the audio is okay.
Good morning, Carl. Yes, leading economic indicators for the month of August. Expected down 0.2, double it plus. We're down 0.5%. And that number is the weakest going back to April when it was down 1.3. We did have a revision in the rearview mirror. And the only reason I mention it, it takes one of those negative numbers last month, minus 110, and makes it positive. So instead of 7 of 8 being negative this year, it's now 6 of 8. Last year, it was 10 of 12. The year before, it was 12 of 12. Leading economic indicators have been leading us in negative territory for years now. Listen, it's a big day in the market. You heard Sarah. It's only up 3 basis points at 4.12 in a 10-year. It's only up 3 basis points at 3.58 in a 2-year, but it's much more than that. If you look at the 2-day charts, the entire curve yields went up. Even Europe yields went up because all the fixed income, all the securities around the globe, the sovereigns, when they traded above yesterday's high yields, they zoomed. And this is a rejection of 4% in the 10s. So even though it's only up 3 basis points, consider the investors and how quickly they reversed from the notion that Fed easing was going to put longer dated treasury yields under, and especially the 10s under 4%. It's not happening. Most likely, we're going to see a beeline right back to that 4.25, potentially into the 4.30s. If we settle here, it'll be a 2-week high yield close for 10. Sarah, back to you.
He looked very animated and excited, Mitch. I like his charisma. I just don't like what he's saying. Let's go into the amicus.
We said that was going to happen. I mean, we literally said the interest rates are going up. They're not going down, right? The Federal Reserve can do whatever it wants. The market doesn't care. The market is saying there's too much risk. Interest rates are going up.
The market is stupid, excuse my language, and is breaking our backs, and I hate it. And I honestly, I don't even care. I don't even want to make any money on the market, Mitch. I just want it to go away. I just want my life to be full of peace again, and I don't want to fight anymore. I've never wanted to smoke. I tell people that all the time. People are like, no, you like to argue with people. I'm like, no, I don't. It's just they're stupid and they're frauds, and no one else is doing, and no one else is calling them out. I want to pass the torch. If you guys want to fight, if you're a leader, hit me up. I will give you the torch. I just want a peaceful life. I cannot sleep at night because these people upset me so much. But this is the amicus. This is the reason why we're doing a live on Saturday, and we're doing a multiple lives a week. It is this document right here. This is the amicus brief in the Supreme Court of Texas. This is not the lawsuit. This is like if someone wants to support what Mitch is doing, they create an amicus. That's what this here. Leslie signed it. I signed it. Peter, Larry, Jeff, Craig. Bunch of people signed this, and we're on page, let's see, 6 right now. I'll show you guys. We're only going to read a page at a time. Okay, so we are on right here. Okay, so we're on the urgency factors. Okay, so I'm going to read this just really quick, guys, and this is linked in the description. I want you guys to study this. This is a pretty easy read. It has all of the evidence, a lot of effort into this, and it is free for you. Don't forget, you guys, our entire foundation at Real Estate Mindset, and the reason that Mitch and I work so well together is it's free. Both of us believe in helping people. Both of us believe that in order to create a permanent change in society, we have to help you. And then by helping you, we can help each other. I hope you guys understand that because we've been trying for a long time. So don't get it twisted. If you're a hater out there, if you're a hater, you're just going to hate. And there's nothing I can say to you anyways. But either way, you guys, let's go over the urgency factors of this case and why the Supreme Court needs to basically send the case back down to the lower court. Urgency factor number one, compound fraud effects, imminent liquidity crisis, ongoing bond issuances, constitutional violations, constitutional emergency framework. So let's go number one, multiple constitution violations, Article 1, 13, open courts, due course of law, uniform and equal taxation, taking without compensation. So you didn't even use the 13th Amendment or the 5th or the 14th. Impressive. Federal coordination requirements, the SEC securities fraud jurisdiction. We are pushing the SEC, especially Mitch. And there's so much going on behind the scenes that we can't tell you guys about yet. But let's just say we are trying desperately to get the SEC every single thing that they need to shut down the bond program in Texas completely. Just overnight, shut it down. Right now it's insolvent. So we're trying desperately to do that, especially Mitch is spearheading everything. Also mail fraud, postal inspections, interstate commerce implications, federal supremacy issues. And there's also statewide constitutional crisis because of what they're doing, systemic government fraud across multiple counties. 37% of households are at bankruptcy risk. Now that I've been working with Mitch for a year and Mitch has trained me to be an absolute warrior in the arena against these people, I think that's low. I think it's higher than 37% of households are at risk of bankruptcy. I think 100% of households are at risk of bankruptcy, to be honest with you, or 99%. If you're not rich, if you're not an oblique, you're at risk of bankruptcy. It doesn't matter who you are. They're taking everything from us right now. Federal securities implications, systemic destabilizing constitutional protections under attack statewide. DCAD, which is Denton County Appraisal District's conduct to systemic fraud and racketeering level misconduct. And then he's going into the violations here. DCAD has violated the black letter of the law. ARB, which remember you guys is the Appraisal Review Board, exclusively cannot shield fraud from judicial review. So they put this state entity there called the ARB to say, hey, if you have an issue, if they're committing any problems, just go to this ARB board and they're going to take care of it, taxpayer. The only problem is the ARB is part of the crime syndicate. And we have an open case for assault and battery. They laid their hands on me. The chairman, the boss, the guy that's teaching people laid his hands on me. That's what's going on in those facilities, just so you guys know. The Supreme Court of Texas grants review to resolve constitutional crisis. So this is what we're asking, an established precedent on issues of statewide importance. The facts above are exactly why the Supreme Court of Texas should grant remand. Okay, and then we'll go into the coordination opportunity on our next segment. But before I move on, Mitch, can you just break down a little bit and cover anything I missed on this first section?
The 37.81% of the households that are going to go bankrupt and or lose the roof over their head are based on the statistics that we had put together going all the way back to about 2003 when the initial case was filed. And consistently, we have chosen the lower numbers throughout all of our analysis. We did it on purpose because there are things that we can't see. We can't see the off-balance sheet financing. We can't see the 313 agreement mechanism in terms of how much money has been taken away from the taxpayers by virtue of a 96% discount going to private developers for these solar fields. We can't see the investment pools, the ramifications of those investment pools that are on their balance sheet. We can't see the off-balance sheet financing. So as time has progressed, more and more of these statistics, like what Travis found the other day on Salina, are floating up. And we're documenting all that. So not only do we have this amicus brief, but now that this amicus brief is out of the way, we're now working on the trial brief. The trial brief is 303 pages as of this morning of all the documentation. Well, initially, based on what we've learned really in the last 12 months because of the bonds, we had calculated 5.1 trillion across the United States, given the fact that we can't see multiple levels of all the additional expenses, including the off-balance sheet financing. The attorneys in Washington looked at that and said, well, but by law, cash reserves held at the bank, 60% have to be in bonds. So the spider web becomes massive. They had calculated closer to 17.1 trillion. And I said, I don't want to go there because I only want to talk about what I can see, what we can quantify. However, look at it this way. If you said, based on the compound cumulative effect of the interest rate today, if you go out 15 years from now, because the state of Texas can go out 40 years on some of this debt, let's just go 15. Do you realize the 5.1 trillion turns into 15 trillion? Not that far from the 17.1 trillion. Now there's a discrepancy in the timeline. The point of the matter is this is massive, massive bond fraud. There's no way around it. And the 303 pages of the trial brief have got over 1,100 links to evidentiary documents. They don't have a defense. They're caught, which is why we're pushing so hard for the SEC to get involved and simply shut this thing down. Put a floor on it. The federal government needs to put a floor, and they need to put a ceiling on that 5.1 trillion. And then it comes back to what I was saying before, that the credibility of the US dollar can be rescued. But it's going to take the federal government getting involved and forcing the hand of the state. And we've got, like Travis said, something in the works to force the hand of the state. But the point of the matter is that 37.81%, I agree with Travis. It's light. I know that. But it's only based on what we could quantify. We can back into that math. What we can't back into is what we can't see.
Yeah, very good, sir. All right, Mitch, I'm going to move on to the housing market update. And to the viewers, this is the part of the video that you're going to want to share. You're going to want to come back to. In fact, I'm going to put our timestamp at 27 minutes and 10 seconds because I'm going to do something special today with our housing market update. I'm just going to quickly go over some inventory real quick. But part of our, because remember what I'm trying to teach you, real estate and the housing market is about hyper-local analysis. Okay, is everything overvalued right now? Yes. For the 99.99%, everything is overvalued. I'm not debating that. What I'm saying is as we are waiting or sitting out or looking, we need to educate ourselves on how these investors and how normally people are purchasing real estate that are becoming successful. And so part of that success is hyper-local review. But today, instead of me accessing the multiple listing service and showing you guys how to use the subdivision analysis form, remember that's free on my website right now. Take it. Take the course right now. If you want to know how to do real estate, take it. Go to my website. It's free. But instead of doing that, we're going to do something different, and we're going to review hyper-local data for bond fraud. And so we've never done that before. So I'm going to teach you guys how to take a city, and we're going to use Salina, and then we're going to use Conroe because that's where I got assault and battered. And we're going to figure out how much potential bond fraud is going on, because it's important to understand that, hey, are my property taxes going to go down at some point, or are they going to skyrocket up for the next 40 years because the city has locked me down in debt? Do y'all understand that? Right? So if the city locks you down in bond debt, your property taxes are going to be messed up for a very long time, more than likely. Plus, property values in Texas are going down. So what happens when the values go down? The rate goes up, right? Because they need to collect the same amount of revenue. Actually, I apologize, Mitch. They need to collect more revenue. So we're going to go in and we're going to look at inventory first, okay? Which is going to be right here. So let's look at inventory first, and then we're going to go into the bonds, and you guys are going to, this is really bad when I get to the bond section because I've already worked it up. Now, here's what I wanted to do is I wanted to show you guys 5 different metro areas. So some of the biggest metro areas around the nation. And I wanted to look at their active inventory, not the new home inventory, but their existing active inventory. So the first one you guys have up, because remember, last, during 2022, 2023, it was all about supply and demand. Like, oh, the prices are going to be sustained because of supply and demand. But when the pendulum swings, they don't say that anymore. It's very, very hypocritical, I guess is the word. But regardless, here's Arizona. Arizona's sitting at inventory of 27,384. And I wanted to show you guys the last time that Arizona had that much inventory was November of 2017. And I also wanted to show you guys that inventory, we're coming into the months where inventory is declining. So unfortunately, the next few months, you're probably going to see some markets decline in inventory because of normal seasonality. But Arizona, we're back above pre-pandemic levels of inventory right now. And when we look at Texas, I mean, Texas is the same thing. In Texas, this chart goes back to July of 2016. We got what, about 40%, a little more than 40% more inventory. Listen, guys, in Texas, we have 40%, roughly 40% more inventory than we had July of 2016, pre-pandemic in Texas. And this is not even counting new homes. When we count new homes, Texas got a real problem. Because again, on top of what you see on your screen, we are booming everywhere with new homes that people can't afford because they're for sale for $400,000 to $500,000. So even the new homes that are just sitting there collecting dust, even though they're under the value of existing homes on a national average, it doesn't matter. You still can't afford to get it. Now, here is the Florida inventory count. Same thing with Florida here, well above where they were pre-pandemic. In fact, going back to July of 2016, they're about 20%, 22% higher than they were July of 2016. And also look at the seasonality. You guys can see inventory kind of going down. That's probably not going to start going up until about the beginning of 2022, February. You guys see that? In February to March, it starts to go up again. So it's starting to go down, but it's well above where it was pre-pandemic, and this is not so important, especially with Florida and Texas, where new homes are everywhere. This is not counting new homes. When we throw new homes on top of that, it gets really ugly because how are they going to sell the houses? No one can afford it, and it doesn't work for institutional investors. Institutional investors aren't going to touch it because the price is too high. Tax, insurance, HOA. Now, here's the inventory for California, super big housing market. Now, California is also over pre-pandemic, but barely over pre-pandemic. So let me just go back to the beginning of this chart. So July of 2016, California was sitting at 83,000 for sale units. Right now it's at 76,000. So not where it was in 2016, but certainly a little bit above where it was pre-pandemic. So it's at about October of 2019. So California making some grounds. That's what I wanted to show you there. Not quite like Florida, Arizona, and Texas, but still making ground. So you see massive inventory increases, but wait until I go to our last housing market. Look at this. This is bad. And I wanted to show you this because it is bifurcated. Inventory is bifurcated, prices are bifurcated, but the fraud is equal. Well, maybe it's not equal, but the fraud is everywhere. The unaffordability is everywhere. The lack of wage growth, it's across the nation. But nevertheless, this is, let me scroll this down. This is New York. New York is in bad shape. Going normally, okay, if we look on the upper end of inventory to the lower end of inventory for New York, it sits at about 50,000 to 65,000 right in here. See this? So about, 50,000 to about 65,000. 50,000 to about 65,000. Okay. So unfortunately, New York has not been able to recover from an inventory standpoint. It's just seasonality. You guys see this massive decline because of the lockdowns, and then you just see normal seasonality right now with no overall growth in inventory. So New York also has a real problem as well. They have a lack of inventory per se, but it is what it is. Now, let's go on to the local review. And this is very important because what you guys are going to start seeing, Mitch and I have been pointing this out, is are you going to start seeing cities go bankrupt? You're going to start seeing people get arrested for bond fraud. You're going to start seeing cities and states freaking the public out. We spent your money. We have a budget deficit. You're going to start seeing that spread across the nation. Now, before I actually hit play here, Melody Wright sent me this from X, and this was interesting. This is from Project Constitution. Now, I can't play the video because it's laced with super bad words, and we can't say super bad words on here. Mitch Vexler, you know this. Breaking $180 million refugee charter school scam. Sacramento School Board caught in massive fraud, right? Entire board resigns. Now, here's why this happened. That board, where it says entire board resigns, is protected with immunity. There's a lack of transparency and there's a lack of accountability. So when you get just one dishonest person in a room full of 9 people, at least here it's 9 people, it's going to be really, really easy for that board to commit fraud against the taxpayers. You're going to see this happen more and more. I'm telling you guys this now. You will see it because there is the lack of the accountability and transparency. But the entire board resigns. California grifters just pulled off one of the biggest, it's actually, they're going to find that's not the biggest taxpayer frauds in recent memory. And this time it wasn't Hollywood, Newsom, or big tech. It was Sacramento Charter School. Auditors uncovered a $180 million fraud scheme. They had fake students because they're able to sell and pass these bonds by lying and saying that we're going to double up our students in 5 years. That's how they're doing this. So they can't prove that the bonds can be paid back unless they make up future enrollment numbers. That's how they're getting this underwritten. So a lot of times what is happening here is they're faking those numbers so that they can get approved for more money. But in addition to that, 6-figure jobs for the friends and family of the board. The boards are reckless criminals. Not all of them, but most of them. Some of them are useful idiots as well. Luxury travel, and it was all billed to you, the taxpayer. Now, I'm going to stop reading this because this goes into refugee stuff, and I don't want to get political. I have my own feelings about this, but that's not why you guys are here. So I'm going to move on, and we're going to do research on Salina housing market here in Texas. Now, in order to do proper bond review, okay, you're going to want to look up something called an election notice, a bond election notice. Okay, here it is right here. These things right here, guys, on your screen are, it's kind of like the kryptonite, because you don't have to listen to the politicians sell you like, yeah, we got to pass some bonds because, oh, the kids need to school, you evil people. Teachers need a school, right? They're propaganda. Just look at the bond notice and go straight to the math. Bond notice, math. That's all you guys need. So here's the bond notice. Every single ISD that has passed bonds has something like this. So if you guys want to see, again, your own school, look it up, your own school, whatever school you're in, bond election notice. And here's what you look for. Usually, sometimes it's Exhibit C, but they have to tell you their existing bond debt, and they have to tell you how much finance charges and fees are going to be on the bonds that they're asking for. So they give you the real breakdown of how bad it really is. Okay, here it is, Exhibit C. See that? Voter information document. This is what you guys need. And then after you get this, you could just divide the revenue into this number and see how many years it takes off. Look at this. So Salina, which only has about 9,000 to 16,000 housing units, is asking for $2.2 billion. Just put this in perspective. Conroe, one of the biggest school districts in the state of Texas, asked for the same. This little tiny town is asking for the same amount of debt as a massive, huge school district in Texas. Because remember, those boards lack the transparency and accountability. So they're asking for $2.2 billion. But I want you guys to understand that's just the principal amount. They got to service this. Look at, they give you 5%. So whoever buys the bonds, which a lot of them is the teachers, it's at 5%. It says it right here. Remember, Mitch and I were like, let's just use 5%. It's right here. 5%. It shows you. And it's also showing you this number. That's the interest it's going to cost. So they're asking for 2.27, and they're telling you, yes, but it's going to cost you as a taxpayer $2.2 billion to service the debt, totaling $4.5 billion. How does a small little town city of Salina, who I got in an argument yesterday with the mayor, how do they justify bearing their taxpayers in $4.5 billion in new bond debt? Their existing bond debt, and here's what's so good about this document. I'm going to show you guys here in a second. I'm going to zoom in real quick. It also tells you the existing bond debt. Okay, so here's the existing bond debt, and this is why these notices are so important. I'm going to show you this, okay? So they're saying, yeah, we need this $2.2 billion. It's going to cost $2.2 billion to service it. Oh, and by the way, we already have $836 million that's not paid. And my thing is why don't we pay the $836 million before you go asking for what? Triple that amount? You're asking for triple that amount? Are you kidding me? And you're breaking this city. And here's the crazy thing. Only the bond election notices give us a truer picture of this number, because look at this, guys. When I go to this here, the Texas BRB data center, see that? Look at this, Texas BRB, you guys see data center? Salina ISD, see this? See Salina ISD? Let me go back to this document. So you guys see again, where does it say Salina? Salina, right here, ISD, see? This says existing combined principal and interest required to pay on time over 29 years is $836 million. You see this right here. But when I go to the tracking system from the state, what is it showing they owe? What is it showing they owe, guys? Where's the 800? Where's the 800? It's showing 390 million. How can people understand what's going on in their towns? And by the way, look at Salina compared to the other school districts. And this is a tiny little school district. How do you justify that, state? And how do you do that? If you're lying to the homeowners, where's the 800,000? Now you could say, well, it's in the interest right here. But when I add the 390 to the interest they're saying is owed, that's only about 650 million. So if that's 650 million, where's the other 150 million dollars? Is the 150 million, is that the off balance sheet bonds? So again, just to clarify, they're saying at best, counting the principal and interest, this is about 650. But when I go to the recent bond election, they're saying 836. Where's the missing money, right? I know we need buildings for teachers and students, and that's important. And I believe in education greatly. But they're taking this money and they're wastefully spending it. And this money is better spent giving back to our teachers. This money is better spent improving curriculum. If the school's running out of capacity, do what they did when I was a kid. They just got a cubicle. That's it. They didn't pass $2 billion in bonds. And when, guess what? I played basketball sometimes when it didn't have a net. Isn't that crazy? Now they have all this crazy gadgetry. That's not needed. But that's how you do that, guys. And then, okay, you look for here's Salina ISD. You look for their financial statements. Okay. So Salina ISD, Independent School District, you guys see that here. And what you'll notice is there's actually two different taxes in Texas. There's your general fund tax. Okay. So their total taxes for Salina residences was 32 million. Plus there's an additional tax called the debt service fund, which is designed to pay bonds, which means these people's taxes would go down about 40% roughly if it wasn't for the bonds. So think about that. So we can show you direct impact on property taxes is those bonds. But I also wanted to show you, look at this. Did you guys know that the state funds a lot of our schools here? I thought it was property tax. I thought we had to keep paying property taxes because that's the only way schools are funded. Isn't that what you were told? That's not true at all. The state is spending millions and if not billions of dollars, as you see here, and you can find this on your own school district's forms. This is littered everywhere. But mainly what I wanted to do is I wanted to show you guys the debt service fund, okay? So when you go down here, total expenditures, they're saying they're spending this amount of money paying their debt down per year, 18,500,000, okay? So let's go back here and let's take we'll just round it down to 5.3 billion. Okay, that's 5.3 billion. So if I were to divide that by the yearly amount that they have going towards paying their debt down, which is 18.5. Okay, let me just divide 18.5. I just want to show you roughly how long it would take to pay this off at that 18.5. Okay, 286 years. Excuse me. And the problem here, guys, is they already passed the bonds. It's too late. We can't help them. We can't help these people. It's too late. It will take them at that current tax revenue gain right there. It's going to take them 286 years. They can't. That's against the law. They got 40 years to pay it. They got 40 years to pay bond debt back. 286 years. Absolutely crazy. Now, I did the same thing here with Conroe. Conroe's where I got assaulted, right? So I went to Conroe. I went to the documents. I'm like, where's their financial sheets, right? I want the bond election. So you got to work sometimes. And I found it right here. See, there it is. This is their 2023 election order in English. So that's what you guys look for. Election order or election notice. This comes up for Conroe right here. And this is the point I was trying to make. Look at it. Okay, so Conroe did it a little differently on their election notice. They did, here's their Exhibit C, but this is Exhibit C3. So this is on their, and there's the tallies there, but they added this additional thing and made it easier for us, and they just added all the debts together. So in Conroe right now, they have $5.4 billion in bond debt and interest that they have to pay off over 25 years. Do you guys see the problem here? And again, this little city of Salina has the ability to get into as much debt as Conroe ISD. How is that possible? How did Salina convince the taxpayers to allow that debauchery? But anyways, and then I go to Conroe, and I want to show you this, okay? Here's the election notice from Conroe in 2023 saying that total proposed debt and service of existing service fees, all that is $5.4 billion. It's right here. I'm circling it right here. But when I go to, again, Texas BRB, who's supposed to be tracking this, where's the rest of the money? They're saying it's $2 billion. But where's the $5 billion? Texas. So when I scroll down, all right, maybe it's just in the interest. Let's go down to the interest. Okay, where's Conroe at? Right here. So with interest, okay, $1 billion. So that's 2 plus 1 equals $3 billion. Okay, so you guys see that? So they're saying $3 billion. The notice says $5.4 billion. Where's the missing $2.3 billion with a B? And this is what I'm trying to show you guys. There's a lack of transparency and there's 100% lack of accountability. So when I keep going, okay, and then I look at their budget. So I'm going to Conroe. Here's their adapted budget right here for 2025, 2026. I click on that. Here's their budget. Okay, Conroe. Now, Conroe, okay, remember I said there's different taxes. Remember, debt service fund. So Conroe is collecting a total of 181 million. 181 million in debt service fund. What is Salina collecting, guys? Salina is collecting, what you guys remember, 18,000, 20,000 at max. Salina is collecting 20 million. Conroe's collecting 181. Salina can't pay that off. Neither can Conroe. But I also wanted to show you, look at the salaries. Just the last thing I'm going to show. So in Conroe, who has the same amount of bonds approved as Salina, pays 471 million to teacher pay. Okay, 471 million compared to, let's see if we can find it, 27 million. So we're talking about a school district paying 27 million, okay, versus 471 million, and they have the same bonds. That's how did that happen? You guys see my point? But anyways, guys, that is my local review on bond debt. Oh, I forgot. I also made this. I totally forgot about this. So all the information that I just went over is right here. Okay, and I use Property Radar to figure out how many units because census data is always off. So, and then I sent this on Facebook into the group so that they were aware. But basically, I put here's a tax debt servicing. Now, I would take this from the 2026 adopted budget. I didn't do that here, but when I divided in by the total debt right here, again, that's 289 years to pay off. I also identified that 16% of teacher pensions purchase government bonds. So they're getting money from the pensions to fund the bonds. You guys get it? And a large amount of state funds go to the budget, and each housing unit is in $328,000 in bond debt. And I also showed here that the home prices are down year over year by 6.3%. So on top of all those things, the market is also down 6.3%. So not good. Not good. That was a 20-minute conversation. I'm so sorry that took me forever. Mitch, your reaction, sir?
It's worse than what Travis just said. You got to go and look at the base of how this actually occurred. So politicians continuously, including Senator Betancourt, well, we have this report. Okay. Mayor Salina, well, we have this report. First thing, who ordered the report? Second thing, what's the scope of work inside the report? Third thing, whose credibility is on the hook with regard to the formation of that report? Fourth thing, who ran the math to determine what projecting forward does with regard to the report? Point being, the report is a complete fake. It's not real. And the reason why it's not real is because Salina has a landmass and they're landlocked. They can't grow in perpetuity. The best they could do, the literal best that they could do, is to double the housing inventory. Well, you're $323,000 per house effective immediately for the existing homes. If you double the inventory, it cuts it in half. That's still $150,000 effective today, not including the outstanding compound interest that is cumulative moving forward into the future. That $5.3 billion in 10 years, 15 years from now is double up. That 5 turns into 15 billion. The point of the matter is they're dead nuts wrong. Crimes have been committed. It is fraudulent. The reports aren't worth a damn. And the entirety of the idea, well, what if our population of students increases 1,500? Okay, great. Let's call that 2,300 additional houses. Even that math doesn't stack. These people are straight up criminals. They have committed fraud. That is why we're hitting the SEC nonstop, which is, how can you possibly allow this to roll forward? You, the SEC, have the duty to protect the markets against bond fraud. They should walk into Salina literally with a subpoena, say, turn over your records. And if they don't, just like we're saying to the, with regard to the Attorney General here in the state of Texas, don't turn over the records, we'll arrest you on the spot. The problem here, one division of the government doesn't like to point the finger at the other division, yet those divisions point the finger at each other. The point of the matter is the bond fraud is irrefutable. There is no defense. They're caught. So given that fact, and given the fact that there's a quantifiable landmass, which can only hold, let's call it another 9,000 houses at best, there simply is zero possibility of paying these bonds off that have been raised to the tune of $5.3 billion in Salina. School district superintendents should be arrested, chief appraisers arrested, and frankly, the mayor needs to be looked at because he's out there promoting this. And I got news for you, Mayor. You signed an oath of office to protect and defend the Constitution of the United States of America in the state of Texas. De facto, at a minimum, you have a third-degree felony problem on your hands because you didn't do it and you're out there actively promoting these bonds. You got a problem.
Yeah, well, we have a problem. The taxpayers have a problem because those people in the boardroom aren't moral, or they're not smart enough to know, like, hey, we got $800 million to pay right here. We just drown our whole town with this debt, but maybe we should stop, right? Maybe we should fill those institutions up. Maybe we should see what's going on with the housing market, the economy, instead of bury them in 4 times more debt. To me, it's like they fell in love with it. Like it's a lust, right? They say like, oh, wow, we can get 800 million by snapping our fingers almost and holding an election. And we can give our families jobs and we can get a commission potentially under the table from these contractors. Well, let's keep doing that. Let's keep doing that because I'm getting rich off of it. To me, to me, that's what that looks like. I'm going to play a video, Mitch, before I get you set off again. So this video is from Jerome Powell talking about the housing market. And, this guy's just an absolute liar. Jerome Powell is lying through his teeth. You know what, guys? I'm going to shut up. I want you guys to comment below and you tell us, Mitch and I, whether or not what Jerome Powell is saying is the truth or not. And I'm going to mute us right now, Mitch.
Hi, Nicole Goodkind with Barron's. Thank you for taking my question. Given the cumulative impact of high interest rates on the housing sector, I'm wondering how concerned you are that current rate levels are exacerbating housing affordability issues and potentially hindering household formation and wealth accumulation for a segment of the population?
Housing is an interest-sensitive activity. So it's at the very center of monetary policy. When the pandemic hit and we cut rates to zero, the housing companies were incredibly grateful, and it was really, they said that was the only thing that kept them going, was that we cut so aggressively and provided credit and things like that, and they were able to finance because we did that. The other side of that is when inflation gets high and we raise rates, and you're right, it does burden the housing industry, and so rates have come down a bit, and as that happens, we don't set mortgage rates, but our policy rate changes do tend to affect mortgage rates. And that has been happening, and that'll of course raise demand. Lower borrowing rates for builders will help, builders will help supply, and so some of that should happen. I think most analysts think that it would have to be pretty big changes for it to matter a lot, for the big changes in rates to matter a lot for the housing sector. And the other thing is by achieving maximum employment and price stability, that's a strong economy. That's a good economy for housing. And then the last thing I'll say is, there's a deeper problem here. There's not a cyclical problem that the Fed can address, and that just is a pretty much nationwide housing shortage. Or a lot of places in the country just don't have enough housing for people, and all of the areas around metropolitan areas like Washington, for example, are very built up, and so you're having to build farther and farther out, and so that's where it is.
And just a quick follow-up. During the last SEP or the press conference following the last SEP, you seemed to indicate that policymakers lacked conviction about their projections, and I'm wondering if you still feel that way.
You know, forecasting is very difficult even in placid times. And as I've mentioned before, forecasters are a humble lot with much to be humble about. So I think right now is a particularly challenging time, even more uncertain than usual. And so I don't know any forecaster anywhere, really. Ask any of the forecasters whether they have great confidence in their forecast right now. I think they'll honestly say no.
It takes dedication.
Well, that's unfortunate because they're spending a lot of our money, and to not have any confidence in the market is troubling. We're going to go into our mortgage update, but first I'm going to pull up the amicus right now. I mean, that guy, holy smokes. I can't believe that guy is the chair of the Federal Reserve. All right, I'm going to throw this up, guys. We're going to go into our second page now of the amicus for today. Let me do a timestamp real quick. 55 minutes. Wow, we've been talking for 55 minutes, Mitch. That's crazy. All right, let me get over here real quick. Okay, so we're on the next page. This is coordinated opportunity, okay? Federal, and remember, you guys, this is in the description. Download this document, share it, send a letter of support in to this Texas court. All this stuff is in the link. Join Texas Horse Barn. Join our movement. You guys know we can't do this without you. And honestly, I really hope people are starting to get it. Just one person can make a difference now at this point. I mean, we have so much set up. Just one person that's watching this can make a difference. Monica, where you at, girl? Where you at, Monica? Coordinated opportunity. Federal and state authorities have a narrow window to address this crisis cooperatively before mandamus proceedings and additional litigation become necessary. The Crosby ISD president, because they've already been taken down, provides the legal framework that the documented evidence provides the factual foundation. Immediate coordination action can prevent a broader financial crisis. I'm going to read that again so you guys understand what Mitch and I are really trying to do here. The immediate coordinated action, and this is what is so frustrating, can prevent a broader financial crisis, but keeping your head in the sand, officials, is going to make it all worse for all of us. The Appraisal Review Board, or the ARB, is fundamentally flawed constitutionally. It was not created to it was not created or set to determine fraud. And remember, the ARB is where we go as taxpayers to get our remedy. If we think that they're committing fraud, remember, we go to the Appraisal Review Board. That's where we go as taxpayers, the ARB. But as Mitch is pointing out, they're only set up to do what they're told. They're not set up to figure out, is this fraud? Is there no due process under the ARB? They're not figured out for that. Now, the ramifications of the Patel case and the decision by the Supreme Court of Texas, case number here, are the same issues being raised by Mitch Vexler, being the standard of review as applied to substantive due course challenges to economic regulation. Status includes an accompanying consideration as reflected by cases referenced above, whether the state's effect as a whole is so unreasonably burdensome that it becomes oppressive in relation to the underlying government interest. So government interest is oppressing its people. Government interest is oppressing its people. To overcome the presumption, status are presumed to be constitutional. So they're presuming they're not violating the law. The proponent of an as-applied challenge to an economic regulation statute under Section 19, substantive due course of law requirement must demonstrate that either, number one, the status proposed could not arguably be rationally related to the legitimate governmental interest, or when considered as a whole, the status actual real-world effect as applied to the challenging party could not arguably be rationally related to, or is so burdensome as to be oppressive in light of the government interest. There is no constitutionality or due process in the ARB process, because if you find a flaw, as Mr. Vexler did in the process, they invoke sovereign. For me to even speak this word is
Sovereign
tyranny.
immunity. Yeah.
I know that, but to even speak that word is tyranny. There should be, no one has immunity for any law. No one, they're protecting them from committing crimes. There's no purpose of sovereign immunity unless there's crimes being committed. There's no purpose of sovereign immunity if there's no mistakes. There's mistakes. There's crimes. If there wasn't, there would be no blanket sovereign immunity. Okay. And that was addressed in the Patel case because of fraud. Fraud, if you commit fraud, you have no immunity. That's like the thing. If you commit fraud, there's no immunity. So there's no blanket immunity because all these people are committing fraud. Mr. Vexler is not just arguing my value is wrong, but alleging systemic fraud, ultra virus beyond the ARB's competence, and exhaustion and inadequate for fraud based on the constitutional claims. Now, he's also saying the importance of this case, the issue, the Court of Appeals dismissal, because he got the Texas Supreme Court dismissed the case and said, you can't go after the government. You don't have that right, Mitch. You don't have the right to hold us accountable. That's what they ruled. Right? Now, the constitutional question, can the legislator or lower courts constitutionally bar judicial review of systemic fraud claims by confining them to administration scheme that lacks discovery, subpoena power, or fraud authority? Why should the Supreme Court of Texas care? This is a classic open courts problem. If ARBs are the exclusive forum, remember, you guys, the exclusive forum, I got attacked. The taxpayer got attacked physically. That's my exclusive remedy. I was attacked from my exclusive remedy to take care of this. Do you guys see what they're doing to us? I hope you do. Then property owners have no meaningful remedy for fraud. That is exactly the type of constitutional anomaly the Supreme Court of Texas exists to resolve. Right? Like, that's your job. So, Mitch, I'm sorry, guys. I didn't mean to be too charismatic there, but this really makes me mad. Mitch, can you sum up what we just read and anything you want to add there?
The reality is that there is no such thing as immunity for fraud under any circumstance. And the idea that somebody would say, well, we have this and you can't touch us, is exactly why we are in the boat that we are in. This is exactly why there is $606 billion of bond fraud that the state of Texas doesn't have a hope in hell of paying for. It can't be done. There's no math on this planet that'll back this up. What are they going to do, Governor? You're going to go to Jerome Powell and say, Mr. Powell, please print more money for us because we screwed this up so badly? The reason why I keep saying the floor and the ceiling is because the floor and the ceiling on the outstanding debt, you take that 5.1 trillion, you've now capped it. In other words, it can't not possibly turn into 15 or 17 trillion when you've capped it. We deal with it as it is. The government admits it screwed up. It didn't work. Now let's fix it. Let's be gentlemen and ladies, sit down and fix it. But this idea that they're hiding, you must realize that in the case of Denton Central Appraisal District, we've calculated that they're short. Right now, today, they've got a deficit of roughly 20 million per month. When the property values go down, i.e. 10%, 20%, 30%, that 240 million ends up turning into over $1 billion per year short deficit. The money doesn't exist, which means they've got to, at that point, go and raise the mill rate, the tax rate, or they're going to have to commit additional fraud and say, well, the property values are X now. Now we're going to deem that your property's up another 30 or 40% to offset it. The point of the matter is that's the definition now of compound cumulative fraud. They're caught. That's the whole point of this amicus brief. There is zero defense. It's the whole point of us speaking with the SEC saying, okay, SEC, prove us wrong. The math is the math. We're giving you everything we've got. You, the SEC, can't prove us wrong. Nobody's been able to prove us wrong. And by the way, our numbers are extraordinarily conservative. Well, given that fact, and given the fact that the SEC's sole job is to protect the markets against bond fraud, it's time for the SEC to get involved, send in a full-blown field office to these places, i.e. Denton Central Appraisal District, Salina, Godley, say, turn over the information. And by the way, the Attorney General's office, turn it over. Because here's the problem for the state of Texas, and there's something in the works. I just sent an email earlier this morning. But the state of Texas, by virtue of the Attorney General's office stating, well, we're not the repository for these documents. Excuse me? You've been told multiple times and handed evidence that fraud has been committed. And you, the Attorney General's office, just said you don't have those documents. Not only did you just lie to the taxpayers of the state of Texas, you just lied to the SEC. The Attorney General's got a problem. They all do. So let's just admit it. You got a problem. Let's all sit down. The goal here is force the state of Texas to go deal with the federal government to put a floor and ceiling on this before this blows up. And that's exactly what's stated in this amicus brief. We're laying the map out so that they can follow it. And unfortunately, I'm having to be a little bit verbose to shove it down their throat because they deserve it. If left to their own devices, eventually some government entity is going to stand up and say, that's it, we're going to arrest you. That's fine by me. A lot of people belong in jail, but it doesn't solve the problem. The bill that I wrote for Helen Kerwin solves the problem for mom and pop at the local level. It does not solve the bond problem. We know what the solutions are. We got a pretty fair idea, but we can't negotiate with ourselves. We have to have some very serious, smart people to sit down and say, okay, we've got this problem. Now we've got to put a floor and ceiling on it.
Where are those people? Who are those people?
To be determined.
It's unfreaking believable.
Yeah.
And I'll just give you guys, I'm going to go into the mortgage section. I just want to give you guys an update, though, on what we're talking about. We have reached out to so many politicians, guys. We've reached out to people that are running for governor. We've reached out to House reps, people that are running for House reps. And most of these people, they're frauds, man. It's working with the politicians has been one of the most soul crushing events I've ever done, because it's where you learn that they're lying to you. And they don't really make the bills. They just use this propaganda. They literally take someone else's bill, they change one word. Sometimes they don't change anything, and they submit it into the legislation. And then immediately after they submit someone else's bill into the legislation, they go onto social media and say, I submitted a bill to end property tax. Aren't I great? And then they lie to you about the bill, and it's really discouraging. Or they just don't listen to us. I mean, we've sent so much stuff, and I wish I had better news for you guys, but it's not looking good so far. We can't. In fact, I constantly have been thinking, how much time and effort do I want to put in for this channel? How much time and effort do I want to put into only going after these people and abolishing property taxes and putting everything that I have into that? Because I think it's a huge issue, and I think it's the biggest civil rights movement of our lifetime. But one of the main reasons that I'm not doing that and I'm not going after it harder is because we don't have anybody to push. And that's the ultimate solution here. And the SEC hasn't done anything yet. DOJ hasn't done anything yet. The DA hasn't done anything yet. No one has done anything yet. So if I found someone, and if you're a politician watching, or you're trying to governor or whatever, whoever you are, if we knew, and you're an elected official, if the people knew that you were going to fight and end property taxes to the end, no matter what happens, and you were going to stick to that, half the state will support you. More than half the state will support you. The problem is we don't know who to believe anymore, because now it's crystal clear that the politicians will use property taxes as propaganda to get reelected. And that is absolute debauchery. So anyways, having said that, let's go into the mortgage review. Did you want to add anything else there, Mitch?
Let's just say, for the sake of conversation, that given what we can quantify, that 5.1 trillion is accurate. Okay. The U.S. national debt is 37.5 trillion, 38 trillion. That's a pretty good chunk of money, apples to apples. Let's say that the law firm is closer to being right, somewhere between 15 and 17.1, given the ramifications, the spider web that this money is splattered everywhere across the United States and maybe even internationally in the form of the bonds. Well, 37 divided by 17, you're 38 divided by 17, you're double up. It's 50% of the U.S. national debt. Now, obviously, there's a whole bunch of derivatives and that kind of thing out there to the tune of 600 trillion, which is a whole other problem, because if the banks took derivatives out on these bonds, well, that's not going to get paid off either. So the point of the matter is, this is going to blow up. The system is going to implode on its own weight, whether we're standing here or not. The simple fact that we've got this exposed and we're able to lay it out now, we're able to articulate it. The history is irrefutable. It's in the 303 pages of the trial brief that we're now preparing. It's in this amicus brief. We're laying the groundwork for any one of the federal divisions to say enough is enough. We're going to start going after these states. We're going to sue them. The DOJ can do this. The DOJ can file a lawsuit against the state of Texas to make them comply. Problem is, when the state of Texas does comply and they turn over the evidence, they're going to find the exact same thing we've already said. We just used the math to get there faster. The point of the matter is the crimes have been committed. If this blows up, think of it this way. By federal law, cash reserves at a bank have to be held, 60% of those cash reserves, in bonds. You've already got 600 banks of the remaining 4,700 that are having trouble surviving. Those 600 will go. Who else goes? Where are the cross-collateralized loans between those 600 and the remaining 4,700 banks? The point of the matter is, why are we doing this? And to Travis's point, this is difficult. This is not for the faint of heart. But the ramifications of not pointing this out and not doing this are 143 million households have got a huge problem. Out of that 143 million, based on the 37% as a real number, give or take, that's 42 million households will go bankrupt or lose the roof over their head. What I said the other day may not have resonated. Destroy mom and pop, and you literally destroy the stock market. You will cause a tailspin into hell that you can't get out of. That's why we're doing this, because this is fixable. Not perfect, but it's fixable. Point of the matter is, doing nothing isn't an option, and everybody's got to get involved. This is all hands on deck. You should be calling your politicians, school district superintendents, chief appraisers, bombard them with emails, go to the board meetings, say, we're not putting up with your crap. You make the statement right now, you intend to repeal all property tax in favor of the uniform state sales tax, or we as a collective society will show you the door.
Yes.
Put in jail.
I wish we had that already. We are fighting so hard to get exactly that. I want to go into the mortgage, but there are a couple comments here. I wanted to address these comments. First is from Joe. Thank you, Joe, for the support. I'm a full-time YouTuber that's halfway in advocacy that is not getting paid. So I really appreciate you helping me not go bankrupt. But Joe, he's saying, have you guys contacted Thomas Massie? And I looked him up while you were talking. And there's some comments here as well that some people said that this is like the only good guy left in Congress, only real congressman. Do you know who this is, Thomas? Do you know who Thomas is, Mitch?
Oh, well, I've heard of his name, yeah, but I don't know anything about him.
We should, Joe, I will reach out to him as well because you said so. We have emails like ready to go, right? So it will take like less than 5 minutes. So I really appreciate the support. We will reach out to him. So thank you, Joe. Also, Harry Parrott, that's a funny name. Thank you for the $5, brother. I appreciate that support as well. Now he has something interesting he wants to say, Mitch, but he's saying bonds are bad, yes, but certificate of obligations are worse. And he's asking us to expose this. I don't know much about certificate of obligations. I don't know enough to expose it. I'll have to learn, and I can learn, and then I could research it, and I could dig in. But Mitch, is there anything you want to, and thank you, Harry Parrott, again, that's such funny, but anything you want to say about certificate of obligations? Do you know what that is, Mitch, intimately?
Yes, the CDOs, the CDLs, they're all credit default loans, mortgage-backed securities. These are all the derivatives that people believe will pay off. And in theory, it should. They're basically insurance policies. The problem is it won't. It's complete nonsense. The reason why is because once all that amount of banks, you lose 600 banks due to what's going on, the system will simply self-implode. There's no way. There's nobody to collect the money from. There's nothing left. It self-destructs. And if you think, 2007 was mortgage-backed securities, credit default swaps, because they believed in it, right? They had it out there, but it was proven that it didn't pay off. It blew up. Well, That's mostly around the real estate problem having to do with the mortgage-backed securities, i.e. Lehman. This problem, just for the sake of conversation, now it's much bigger than this number, but just run with it. So you look at 2007 and you say that's a 1. Well, by virtue of what we've got in this amicus brief, it even shows a direct comparison to Enron, literally a direct comparison to Jeff Skilling in the mark-to-market. Well, 1 is the issue of the real estate in 2007. Now, let's take 1 and multiply it by 60, having to do with the bonds. This problem, at a minimum, is 60 times larger than 2007. Literally, 2007 will seem like a picnic in Central Park. That's how big and how bad this is. And I made a comment several videos ago that this is the equivalent of the tail wagging the dog. It seems small. It seems insignificant on the overall scheme of things of 5.1 trillion. 5.1 trillion is massive. It's the ramifications of what happens when this implodes. You end up in a greater depression because once it implodes, you can't stop this. You will start seeing days in the market down 1,000, 1,500, 2,000, because it'll be sheer panic. And the point that is laid out properly in the amicus, this is quantifiable and this can be dealt with. Put a floor, put a ceiling, we cut it off, we stop the hemorrhaging in terms of the compound interest. Things can be done today. Ignore it and the system implodes.
You mean keep ignoring it, and the system will keep imploding because we're already past the point of no return.
Yeah,
This
for
is
real.
I'm going to read this comment from Joe. You didn't have to send in another super chat. I appreciate that, brother. Thank you so much. You didn't have to do that. Thank you. He's saying that Rep Thomas wears his. This is pretty cool because I didn't read this comment yet. Had his own debt clock he made around the house floor, forcing everyone to look at it. I don't know. I'm gonna start looking at this guy. The thing is, Joe, like, I'm not trying not to know what's going on, but I do not believe in politics in any way, shape, or form. And so because I don't believe in it, I don't watch them because I feel like they're lying to me about every single thing. But this is interesting to me. And the thing is, I don't want to get hurt. It hurts me when I hear people lie to me into my people in my city, my town, my state. It hurts me because we look up to those people. So I don't follow politics, man. It makes, and anytime that someone talks about it, it doesn't matter what party they're in, it just makes me sick to my stomach because to me it divides people and I want people not to be divided. But he's also an MIT grad, has a farm, lives off grid, real thorn in everyone's side on Capitol Hill. To me, those check. I like this guy. I want to talk to him, right? Those are, and I was just talking to Mitch about this yesterday because we found out news yesterday. It was absolutely heartbreaking. And I was asking Mitch, and I was a little bit venting to Mitch, and I was like, Mitch, is there any politician that will just stand for what they believe in? Like, what happened to the people that would break away from their party? If they're just, where are the people that are really people? Where are the people that are really themselves, that are standing up for what they believe in? They don't do that anymore. So when someone joins the Republican or Democratic Party, they're given a list of talking points. And it's like, you gotta believe this way if you're a Republican, or you gotta believe this way if you're a Democrat. And that's the biggest nonsense in the world. You can't judge people based on two parties. You can't judge me based on if I'm a Democrat or Republican. I'm way more than that. I'm way more than these crooks. So that's why I hate it. But this guy seems really cool. Sorry for that little ridiculous rant. But let's go on. Did you look like you were jumping at the bit there? I want to go to our mortgage update, but did you want to say something, Mitch?
Well, in the beginning, so this probably goes back 4 years, but I actually spoke to 2 MIT professors and grads and to verify the numbers. So I've had double check, triple check where we were starting back then. And then I reached out to them again when I locked onto the bond problem. So again, to double check everything, because some of these models are pretty sophisticated. But
Yeah.
the point of the matter is, if Mr. Massey is true to his roots, he would be one of the people that you want in the boardroom when they finally wake up, just like they did in margin call, and say, holy crap, have we got a problem? That's the type of guy you want, because if he understands the math, this is what needs to be dealt with. And this math is much bigger than any politician. this math is much bigger than the US government itself, the federal government, because the Federal Reserve is useless. And when you understand this math, either you put a floor and a ceiling on this, or like I said, it implodes. It will implode at the state level. California is sinking. I mean, the Titanic in California has got so many holes in it. It's a strainer. It's sinking, and they can't get any more tax money. They're killing the economy. Do you know that they just went to a 5% sales tax on a house to try to generate more money, and all it did was lock up the market?
Yeah, they got less money.
Yeah, they got less money. Exactly.
Yeah,
So
they made it too unaffordable.
it's the math, and it's bigger than any government. You need legitimate people that understand that statement. And right now, if they understood it, they would be shaking in their shoes.
Or they would be they're putting their head in the sand, either or. Ray, this is interesting. I say build a wall around California and just forget about it. And I only brought that up not to talk smack about California. Remember, I'm from California. So actually, I have a right to talk about California because that's where I was born and raised. But we were talking, I won't use any names, but let's just say someone that's a big investor in California who's in the Pacific Palisades area, and this person wants to de-annex the Pacific Palisades from California. So there are good people in California, but it's just ran by bad people. That's robbing people blind. I mean, I feel really bad for the young adults in California. You can't even live. So let's go into the mortgage update. I'm going to do our timestamp now. Sorry about that, guys. I like Saturdays, Mitch. I don't feel rushed. I don't feel like, oh, we got to keep, remember, I was like, Mitch, keep it short. We got to keep this under an hour. I don't feel that rush, Mitch. I feel like we could stay here if we want to talk to people. We could do all kinds of cool stuff, but let's do our mortgage update and mortgage report. Now, remember, you guys, and I went on social media and I corrected the people, and I don't know if anyone's watching that did this, but there was a few loan officers and realtors on social media that was like, oh, the Fed's going to cut the rates today. Get ready to refinance because rates are going down. And I commented, I was like, hey, did you not learn from history here? Like, do you not remember what happened last time when the Fed cuts the rate? At least in this market, the mortgage rates go up. And we saw that happen for the last 2 to 2.5 days. But here is what you guys are going to want to watch, not the federal funds rate. The federal funds rate is not for residential mortgages, which is a longer term debt. You have to look at the 10-year treasury. And right now, remember, right before they cut those rates, this was almost, I think it was close to being under 4%, or it hit under 4 or what, somewhere along those lines, but it's up about 13 basis points from that point, which means that the interest rates are now above 6%. Remember, before they cut interest rates, this was what, 5.9 on Monday when we did our live. I think this is around 5.9, so it is up, but it did go down 2 basis points on Friday. So this is why, and Mitch has really like affirmed this, don't listen to people, do math. The beauty about math is we can take out emotions and inconsistencies and people lying to us if we just do the math. So just do the math and figure out how all of this stuff works. You guys can do that by going to the course I made, my home buying masterclass. It's a free course. I go over interest rates. I go over how it works, how to shop, how to keep your credit good, the difference between FHA and conventional, amortization schedule, all of that. It's a free course, okay? But this is the most important thing. So if you're going to buy a house, which if you're going to understand it's one of the worst times, I get we want to own the shelter. For sure, I do also. I'm renting this right now. I'm renting it. But and you guys know this, if I were to buy the house that I'm renting, my payment would be over $1,000 extra. So this house, I know that because there's homes listed for sale in this neighborhood. This house will cost me $1,000 extra a month, and I will have to put down $50,000. Or I could take the $50,000 down that I would have had, and I can buy stuff like this. Sorry, I can't. There it is. I love it. I love it so much. This is just 1 ounce round. I love 1 ounce rounds. So here's an amortization schedule at $400,000. This is a 30-year at 6.35% interest rate. When I calculate this, the total amount of payments shows you that it's over double up. So you know when people are like, when you rent, you pay 100% in interest. Well, when you own, you pay 250%. When you own, you pay 250%, because what you guys are looking at here is over 100% above the loan amount, because it's 896. That's over 400,000. Okay. But it's not taking into account taxes, insurance, HOA, and maintenance. When you add taxes, insurance, HOA, and maintenance, it could be 200%, 250%. And I say that not to pick on realtors, because realtors hate me at this point. I say that because you got to be super duper careful. This is buying a house is the most important purchase and most expensive purchase that odds are that you will ever make in your lifetime. And to put this in perspective, in case, oh no, I got to buy a house. Oh, is it time to buy a house? When's it going to crash? You guys, it took me 9 years when I lost everything. It took me 9 years of wanting to buy a house and working towards those goals before I finally bought a house. 9 years. So enough of like, I had to buy a house tomorrow. Enough of that. It took me 9 years and it was a great decision. But here's your amortization schedule right here. Notice as well, the first year you pay $25,000 in interest, but the last year you only pay, can you see that? You guys can only pay $1,000 in interest. So that's how this is amortized. It is front loaded with interest. So it's front loaded with interest. The bank makes money before you pay the loan off. And you see that in the principal. So the last year, the principal payments are $28,000, but the first year, the principal payments are only $4,600, meaning that's how much of your loan is paid down. So if you want, you guys, really what I'm saying here is you have to pay this off early. If you do not pay this off early, odds are you're going to be a servant to the debt. So just pay it off early by doing 2 extra payments a year. Okay, so 2 extra payments a year of your principal and interest, not even taxes and insurance. You don't have to do 2 payments of PITI, just do PI, principal and interest. 2 payments of that in this scenario would be about $4,800. So I'll do $4,800 yearly per year. Let's calculate this. So $4,800 extra payments per year saves me $179,000 in interest, and it saves me almost 10 years off of my loan. So you don't, and the other thing, guys, you don't need a refinance. You don't need a refinance to change your term. So I hope you guys never forget that, actually. So I think that's just about everything that I had on that. Let's queue up this video now on interest rates, and we're going to hear what the market is saying about interest rates. But in just a couple more pointers, guys, if you are shopping for a mortgage, remember when you pull your credit, there's a grace period of about 30 days before the inquiry. A second inquiry will hurt your credit, because remember, every inquiry will hurt your credit, especially with credit cards. Don't be shopping for credit cards. This is drowning you with inquiries, lower credit, lower credit, low credit. If you go and apply for a mortgage, as another example, and you get turned down, wait a little bit. Don't keep going to people like, oh, can you qualify me? Can you qualify me? Don't do that, because it's just going to hurt your credit the whole time. You go and you plan on it. You do 1 inquiry and then you shop with 5 lenders, because remember that grace period. But what you want to do it all at once and shop your mortgage, because you guys, you can save a lot of money if you shop your mortgage. Let's listen to our next video.
Move after yesterday's rate cut. Let's get straight to Diana Olick for the latest. Diana.
Well, Melissa, as we discussed on Tuesday, before the Fed cut, mortgage rates could go up, and they did. They went up 15 basis points this morning, adding to 9 basis points that they rose yesterday, making 24 basis points specifically since the Fed cut its rate. And that all according to Mortgage News Daily. Now, that's because, as many experts weighed in, they expected that people were kind of buying into the expectation and then would
Are you frozen or not?
Due to technical difficulties, Travis will be right back. It's okay. I hope people can hear me. I see a few comments there. Travis will be right back in. One of the points that I do want to make, though, while we're waiting for Travis to come in, if you have a bank and the bank is sending you your mortgage statements, it's important that you realize you may actually have a cause of action against your bank called mail fraud, because if your school district has overvalued and the CADs have overvalued your tax bill and the bank is putting that out, well, that means that you could file a complaint against that bank with the FDIC for mail fraud. And every incident, every envelope is $2,000 and 4 years in jail. That's another way to put pressure on this system, where you start calling the bankers and say, hey, you sent me this bill. This bill is based on a fraud. You, the bank, Mr. Banker, are promoting fraud. Do you understand? Fix it, lower my value, or I'm going to file a complaint against you individually and the bank with the FDIC. Just another lever to be putting pressure on this fraudulent system. Okay, I see he's back.
Were you scared?
Couldn't figure out what was going on. That doesn't happen very often, but it's all good.
So you weren't scared. That's good, man.
Nah.
That's good. A weaker person would have been scared. Oh my gosh, I can't believe that happened. I'm so embarrassed. My whole computer crashed. So by the time, I had to restart my computer, turn it on, come back in. That's how long it took me to restart my computer. All right. So thank you for entertaining them and keeping them still here. We still got a few people here, so not everyone left. All right, let's read this last page for today of the amicus, Mitch. I got the timestamp 131. Good. Oh my gosh, all my buttons are messed up now, so I'm just going to hit this one. Oh my gosh. Okay, actually, that was the wrong button to hit. Here, let me add my screen. I'm so sorry. By the way, you guys, go to that Facebook page right there, okay? Here it is, Abolish Ad Valorem Property Taxes, Texas Horse Barn. That's where we are on Facebook, where we go to talk and slam people on their property. Here it is right here. Got it. All right. That was way more brutal than you guys could possibly ever imagine. Okay, so here is our next page of the amicus. Boom. Okay, and this one is due course of law. All right, so again, this is going over Patel versus TDLR. So constitutional question, does forcing property owners to rely exclusively, and this is the point, remember, on ARB remedies. We have no remedy. We have an assault and battery charge on them, against them, while barring fraud claims from judicial courts, create an oppressive burden inconsistent with due process of law protections. Why should the Supreme Court of Texas care? Patel is the Supreme Court of Texas' own president. So it's their own president. Extending it to property taxation would be a doctrinal development of Texas constitutional law, which justifies granting review. Number 3, equal and uniform taxation. The issue with equal and uniform taxation, the CADs allegedly apply non-uniform valuation methods, create arbitrary clash codes, and manipulate data outside of the appraisal software. The constitutional question, do systemic departures from uniform appraisal methods applied unequally to similarly situated properties violate equal and uniform requirement of law? It says art right there. Why should the Supreme Court of Texas care? The Supreme Court of Texas is the ultimate guardian of the state's uniformity mandate, and systemic non-uniformity across counties is squarely within its constitutional oversight role. Number 4, takings without compensation. The issue, when property is taxed as fraudulently inflated market values, equity is stripped without compensation, meaning they're taking my equity in the form of taxes, but I'm getting nothing for it except closer to bankruptcy. Constitutional question, does systemic overvaluation resulting in forced loss of equity amount to a taking? I like how you said that, Mitch. Why should the Supreme Court of Texas care? Expands the boundary of takings jurisprudence into the property tax context. Again, a constitutional development. Number 5, separation of powers, judicial review of fraud. Issue, allowing CADs, which remember is Essential Appraisal District, and ARBs, which is the Appraisal Review Board, to police themselves while invoking sovereign immunity effectively insulates constitutional violations from judicial oversight. Constitutional question, Does administration exclusivity when applied to fraud by a government entity, your words, impermissibly violate the separation of powers by deriving courts of their constitutional role to detect executive abuses? Okay, and so we're going to get into this later. We'll get into this on Tuesday when we come back to do a live. So we'll start on page 9. And real quick, I have to reset this up. I forgot because my computer crashed. So Mitch, can you sum that up? And as you're doing that, I'm going to pull up the quiz question. So anything you want to add to what we just read?
Yes, it's important that everybody realize this document, although based around the Texas Supreme Court, is not just applicable to Texas. So here we have uniform and equal, but in California, which is unbelievably screwed up, they have what's called the Board of Equalization. Therefore, the document that we've presented to the Supreme Court of Texas could be modified and used under the same circumstances in California. That's one of the points we've made to the SEC. This is not just a Texas problem. Yes, we have the evidence, and it's monumental against, i.e. the Attorney General, State Comptroller, Denton Central Appraisal District, and all these other CADs. But the point of the matter is, it's the pattern and practice of how the fraud was committed, proving that there's no uniformity of application of the law, and there's no uniformity of the law between the government entities themselves. And that's what Travis was just reading to you. That's the difference of what we're saying here. And the proof is the proof. It's irrefutable. So the documents that we've presented on my website, on Travis's site, on Jeff Mashburn's site, this information proves the pattern and practice across the United States. California is in it. Everybody has got the same problem. If it's all associated with USPAP, that's where it all stems from. They just simply ignore the documents. And then they say, well, we're the fox guarding the hen house. We get to be the sole determiners as to what law is. We, the CADs, get to be the sole determiners as to what value is. And you can't lay a glove on us by virtue of sovereign immunity. Sorry, that's not the state law in any state. That's also not the federal law. And there's so many problems here. If that's the position they want to take, put them all in jail under RICO.
All right. We're going to start our conclusion. So I'm going to pull up some stuff, but we got an interesting question here, and I appreciate you, T.A. Chapman. He's asking, do you think we'll see the housing market crash to Japanese levels where you can buy a 20,000 house in like 10 years? I don't think that far, but the demographic decline is concerning for home ownership, as well as everything you have discussed. I want to say first, we get like right now, like some housing markets are declining greatly statistically with the data and prices, and there are some housing markets that are not. And within each of those housing markets, there are some subdivisions that are doing the opposite of what's happening nationwide. So it's all about hyper local review. But here's the interesting thing about the demographics. So based on the Harvard report, and it's a Harvard report, but the Harvard report went into the fact that the only home growth demographics, right? The only home growth is going to come from immigration. And I believe they highlighted illegal immigration. And now that is changing, and we don't have that, and we have close to declining population. If we have declining population on top of, because remember, TA, we also have 15 million vacant homes. So despite what you're hearing from realtors and National Association of Realtors saying we're shy, I think they say like 3.5 to 4 million houses. Well, we have 15 million right now that are empty, vacant, empty. And we have a whole bunch more land across the United States that we can build. So we have all this land, we have all these vacant houses, and yet they're saying we have a housing shortage. We have a cost of living crisis. And so as the cost of living crisis continues to play out, and if we experience a decline of population simultaneously as the boomers are selling houses, then you will have many factors hitting at the same time in the housing market. And that could create a situation to where it could change the housing market forever. It could take, we may never be able to see what we used to see from 2012 to about 2019 in the housing market, where it was relatively easy to invest in the housing market. I don't think that the days of easy investing in the housing market are coming back probably within a decade. And I'm talking for normal people. I don't consider myself normal only because I've been sitting on the sidelines, protecting my purchasing power as much as possible, ready to strike. And I don't think a lot of people are doing what I'm doing. I'm passing up, I don't know how many deals. So I think that, first of all, I don't think the median is going to get to 20,000. No way. Because right now it's like about four. So it's not going to get to 20,000. If it gets to 20,000, brother, we got a civil war and there's all kinds of other stuff going on that it doesn't matter anymore. If house values get to 20,000, houses don't matter. Like staying alive is going to matter, right? If that happens. So I don't think it's going to get to 20,000, but I definitely, without a shadow of doubt, I know that the housing market is going to be shifting into the cycle, into this pendulum swing for a substantial period of time, because we have multiple problems. It's not just with the price of houses. It's what the price of houses is doing to everything else, like property taxes and homeowners insurance, as an example. It's having all the other costs of living skyrocketed. A lot of that root problem of the price increases is from our houses. So I think that houses will go down. But the other problem, TA, is we have a government and Federal Reserve and Wall Street and a banking sector that's going to do everything they can to stop it. And that's why they haven't gone down already. And that's why they're inflated like they are, because of these other interested parties. In other words, TA, in America, our house isn't just our shelter. Our house isn't just a roof over our head. Our house is somebody else's investment. It's not just our own. It's someone else's investment. Remember that. And that's horrible. And the other thing, TA, is like some markets are really different. Like in Texas, we got so much inventory. I showed you how much inventory Texas has. Plus we have new homes. So we have a plethora of inventory, but then I showed you New York. So New York is job loss, bankruptcies, right? So it's going to be interesting to see that play out over the next 5 years, but it is going to play out for a long time. And I say that, TA, because don't rush. Do not rush. Sit back, take your time, wait for your market to turn into a market like my market. Biggest problem in my market, and I've showed you guys multiple times, I can find homes 40% in wedge right now. I showed you that on Monday. I found a 48% wedge home. But you also saw on that same home, it was overassessed in value by a minimum of 150,000. So when I do my payment calculations and stuff like that, it's out of control. And by the way, TA Chapman, thank you for supporting the channel, brother. $50 is crazy money. Thank you for that, sir. Appreciate that. That allows me to get a silver coin. Thank you for giving me a silver coin, sir. Mitch, would you comment on what TA is saying?
Several things there. We have a circular argument as a direct result of the compound cumulative fraud. The fraud has got to be taken out of the system in order to rescue the system, i.e. rescue the US dollar. The ramifications of not doing what it is we are suggesting needs to be done, unfortunately, ends up in the War of 1776. You do end up in a civil war because you are literally stealing money from your constituents. History is history. History is real. There's another interesting take in history, which is for 15 ounces of silver, you could have bought a house in the Great Depression. Just think that one through for a minute.
Wow.
Yeah. So to Travis's point, yeah, we have a cost of living crisis. But that cost of living crisis ends up in a circular argument that is self-fulfilling, because once the system starts to break, the facility, the infrastructure, the people, the mind power necessary to fix it, they can't respond fast enough. And that's what we're laying out in that amicus brief. Another point would be, do you realize that if you go back 5 years, the average value of a house by virtue of the fraud across the United States to today, 5 years ago to today, they claim the values are up 100% in 5 years. There's no math on this planet to back that statement up. Just because the inflation took off on a new house and you say that's the value of a new house, that's got nothing to do with an old house. And that brings me to the point, which is house value would be one portion of this equation. How much is my house worth? Price is what you pay. Value is what you receive. I would suggest that people who have bought a house recently, the price is what they paid. The value that they received, if you go back just 5 years, that's a 50% reduction from the day you closed. You literally bought a house that is more than likely going to see a 50% reduction in value just to get back where it was 5 years ago. That's the fraud in the system. That is what has to come out. It is quantifiable. That's what we've done. We've quantified it. It's going to take mom and pop getting involved and saying, we don't want civil war, but we sure absolutely want you politicians that have done this thrown in jail. You broke the law. You committed RICO. You stole our money. It's up to the politicians to fix it. This part of this problem is political. Another aspect of this is going to be legal. We're hitting on all 8 cylinders legally, but wouldn't it be wonderful if some of the politicians stood up and said, we need to join hands and fix this once and for all?
Well, no, not only that they say that they mean it and that they do it, because we can get people to say that. And that's the dangerous thing here. And that's why a lot of people we haven't even brought on the channel, because we don't know if they're telling the truth. And we don't want to bring someone on this channel and support them abolishing property taxes if we can't prove that they really mean. Well, we don't know what's going on in someone's heads, but we try, right? We ask them questions and we're watching them and we're making sure that they get it. And honestly, we don't have that problem. So I'm going to move on to this real quick. Don't forget, you guys, we have quizzes. We have a brand new quiz. So this is the first quiz question. I'll be doing another one tomorrow for you guys. But my first question is how are independent school district? This is on the channel. Okay, so please, guys, take the quiz. Okay, I'll be doing them every 3 days, and I'll show you the quiz that I made for each and every one of you. You guys are going to love what I've made. But the question is, how are independent school districts ISD bonds described on this channel? And then I have a link to the quiz here. And it's not just a quiz. It's what comes with the quiz that's so valuable. It's that one-page document that you can use to educate everyone in your community. And I hope you guys do that. But it was as investments in teacher salaries and maintenance? No. Bonds don't go towards teacher salaries. Remember that. Number 2, as a mechanism for funding fraudulent activities. Yes, 86% of 469 people got that right. And then 8% said as a tool for reducing property values. I don't know if they're trolling. They got to be trolling. But also people just don't know, right? Like, so I don't want to pick on people, but remember, you guys can go to Real Estate Mindset. I have a whole tab right here on the quiz. Take the quiz. Now, Teachable just recently changed their formatting. So if you click this, this is what will come up. I don't know why it says it like this, but because this is made for the public as well, just hit expand sections right here, okay? When you expand the sections, you can take it. And this is the most important thing, the understand the problem. It's just one document that's based on the amicus, and the quiz is based on the amicus as well. So I will be showing you guys that. So again, just don't forget to go here. Also, Mockingbird Properties. Let me pull it up for you, Mitch. Go to Mitch's website, especially if you're in any lawsuits or an attorney. There's a lot of good documents there. Mockingbird Properties, you go to Mitch's website here, and then you on the upper right, you hit DCAD. And DCAD has a whole mess of evidence right here. So before I go, I want to see, do you guys have any questions for Mitch? People are like, oh, ask Mitch this, ask Mitch that. So if you guys have a question for Mitch, we will stay on for a little bit longer here. And we could get you guys teed up if you have a question. I'm so happy this channel is not MAGA. See, Mitch, let me pull this up here. Where'd that comment go? Look at this. See, people come here to learn about real estate and economy. They come here first to talk about politics. There's a channel for that. Okay. Mitch knows how much I hate politics. And I have never, ever said on my channel what party I'm part of. Ever. Because I don't want to disrespect my viewers like that. Because I don't believe in it. I believe it's division. So anyways, let's see if there's any questions here. The world doesn't need humans. What? Politics. Let's see here. Okay. One job wasn't enough. Okay, well, I guess this is the only question right now. Okay, fair enough. All right, so here's a question. They were denied a home loan because one job wasn't enough. That wasn't a question. Dang it, it was just a comment. I'm so sorry I failed. But let me explain this because I know what this is saying. It's saying that you don't make enough money to qualify for a house. And you shouldn't be surprised because like nobody can afford to buy a house. So one of the mistakes that people do is they keep going to loan officers until one of them says yes. And so my friend, I do not want you to fall into that trap, because loan officers are not equal. Some of them are not good at their jobs, and they will just issue you what's called a pre-qualification or conditional qualification letter and send you on your way, but they cannot close the loan. So if they're saying it's because of one job, it means your debt to income ratio is too high for what you're qualifying for. But that doesn't mean you just need a new job. There's other ways to reduce your debt to income ratio, like paying off your debt. You don't need to make more money if you have less debt. So if your debt to income ratio is not working, as you've indicated here, you either pay your debt off, or you make more money, or get a smaller house, right? But what you should probably do is you should probably take a break, better your situation, increase your credit score, pay yourself out of debt, and then go back in. And remember what I said, every inquiry after the grace period hurts your credit. So be careful, my friends. That's all I wanted to say there. See if there's any other questions here. Anything you want to, I'll just interrupt you. Go ahead, Mitch.
The definition of RICO is creating a false debt and demanding payment via extortion. Well, what he's referring to, or could be referring to there, can you imagine not just your loan officer saying, well, you don't qualify, but if you own a house and an ARB person, appraisal review board person, says, go get a second job and pay your taxes, creating a false debt, demanding payment via extortion. You end up in the exact same boat. Point is, better not to get in the boat to begin with at this stage until this fraud is long gone, because prices are going to drop. They are going to drop dramatically. They have no choice in the matter. The system will self-implode whether we're standing here or not. We're trying to stop that from happening, obviously. But why would anybody want to put themselves in a position where they're being extorted? And frankly, that's why I'm not building right now.
I got a question, Mitch. Someone's like, Travis, what size house and price point? So he said that. So I'm not looking at any of those things. I'm looking at the wedge before anything. So before I'm even looking at like the inside of the house, I'm filtering the data to make sure I'm only looking at houses at 40% wedge, roughly 40% wedge. And then from there, I'm looking at property taxes. And then from there, right, then I'm like, okay, let me look at the house, right? So I'm making sure the math is exactly what I want before I start to fall in love, right? And someone did have a question for you. Did you see the question? Did you see the question by any chance, Mitch? Here it is. Here it is. Got it. Funny that I forgot that. Okay, so question from Mitch. How is the lawsuit going on property taxes?
We're at the Texas Supreme Court, which is that document that Travis was reviewing, which is the amicus brief. I don't know what the Supreme Court's going to do. I don't think there's any way to forecast that. Given the Supreme Court's own rulings, they should reverse and remand this to the lower court so that the trial itself can be heard on the merits of fraud, at which point we will bring the entire house of cards down. They're caught. The evidence is irrefutable. It's on our website. And we are preparing literally this weekend. We started on Tuesday of this week. There's 303 pages of a trial brief that we're now preparing for under the assumption that we're headed back to the lower courts. The sheer volume, there's over 1,100 links to documentation, video, audio, transcripts, government records. The sheer volume they will lose on the volume alone. And as I keep saying, they have no defense. That's on that side. On the other side, we're pushing from the federal level to state bond fraud has been committed. Again, it's irrefutable. You, the government, have got to get involved in this. That's your job as the SEC, is to protect the markets from bond fraud. And as we keep discovering, every morning we wake up, there's another case, such as the one that came through this morning, where the entire board had to resign. Well, they didn't hit on the bond fraud, they just hit on the fraud at the board. But they don't understand that it's not just nepotism inside, which, by the way, is what happened at Denton Central Appraisal District. That's actually part of our 303 pages, that the prior chief appraiser that we ended up getting fired as a result of a deposition that we took of her while she was hired as a secretary. Literally, she was the secretary for DCAT. Why did they hire a secretary who has no training whatsoever? Well, she knew what the schedule was. Turns out her mother was the ex-chief appraiser. Nepotism. The same thing that just floated up to the surface this morning. Again, the pattern and practice of the criminality is irrefutable. So the answer to your question is, on the federal side, we're approaching it. On the state side, we're approaching it with letters such as what we sent to the Attorney General, for which the response was, well, we're not the repository of the documents. That's fine. That document's already been delivered to the SEC. So the point of the matter is, that's what we're working on, is virtually round the clock. I hope to have this trial brief done within a week or so, but that's where we are. I mean, it's an uphill battle, there's no doubt, but it's up to mom and pop also to get involved. And like I said, start making the calls to your politicians, your school district board, your chief appraiser, the board of the CADs, and simply tell them straight to their face, you're either going to repeal these real estate taxes in favor of the uniform state sales tax, or we're going to seek your removal and or put you in jail for fraud.
Well, fraud isn't good. Fraud isn't good. And do me a favor, I'm going to look this up real quick. KWV, are you still with us? If you're still with us, KWV, comment, because I think you were on Facebook and asked me to look this up. Can you just, if you're still here, I'm going to do this for you, but just comment, because KWV wanted us to do a quick breakdown of Rockwall, Texas ISD. So as you were talking, Mitch, I did that. I typed in bond election notice for Rockwall. So remember, because I want to get the existing bond debt as well. So I'm looking for Exhibit C. Generally, it's called Exhibit C. I already have their annual budget up. Let's see if they have it. Where is it at? Let's keep scrolling. Here we go. This is Proposition A. Okay, estimated combined principal and interest. So they're, oh my gosh, man, that's crazy. So they're asking for 458 outstanding. Here it is. Okay, so the dang, that's insane. So this is crazy. The outstanding bond debt right now, you guys see outstanding bond debt is 873 million plus what they want to pass here. So the combined amount amortized over 30 years. So they have, this is crazy. Let me add this up. And then we'll check real quick. We'll check the Texas BRB just to see if they're accurate. So right now they have 873, 839, 395 million plus that 790. But first, let me go to Texas BRB, and this is Rockwall, right? Yeah. Okay. So I'll go to Texas BRB Rockwall ISD bonds. Okay. This comes up. Okay, so they're saying outstanding is 942. Okay, but we know that that's wrong, because when we come back here and we add it all together, we have 873 plus, they just passed the 790. So let's add that. So plus 790, 143, 477. So the amount of debt and bonds that Rockwall is in right here for the taxpayers is $1.6 billion. Texas BRB is only reporting 942. Okay, but we just went over this election notice. Now, when we look at their budget, okay, we're going to take how much money they're allocating to the debt service fund right here. Let me zoom in for you guys. Because remember, there's multiple taxes. There's your general fund, which they tax us to pay for operations like teacher salary. That's fine. And then there's the debt service fund, which they are burying us in. So the debt service fund, they're spending plus the state. So the state is paying for the bonds. Right there, the state is paying $6 million for these bonds per year, but the taxpayers are paying 55. The combination is 61 million. So when we divide the 1.6 billion by the 61 million, let's divide and see how long this will take. If it stopped today, 27 years to pay that off. 27 years. Okay. Now, when you also consider that the total amount of teacher salaries are 115 million, you'll see that these teachers could get a 50% raise for 27 years if it was not but this debt service fund. So if people really want to help teachers and students and things like that, you got to stop the debt and start putting that money towards what really matters. Was KW still here or no? Is she gone? Darn it. She'd probably never see this. But that was for you, KW. I appreciate you. I'm going to get everyone out of here. Mitch, did you want to say anything before we go? We're at 2 hours.
It's not the idea that the raising of the bonds is illegal. The problem is what is happening under the hood is. So they believe that they have, quote, an unlimited tax. And we've seen this language. It literally says unlimited tax is part of what the underwriters are doing. First problem. Second problem is the bonds aren't frozen in perpetuity at 5%. Bonds come due, bonds get paid off. They don't necessarily pay them off. What they do is they roll them up and they roll them out. Understand something. There is no bond schedule. We haven't been able to get one. Now it exists somewhere, but so far the school districts have refused to turn them over. And that's where mom and pop have to get involved and make demand. And if they don't, do what we're doing. File the complaints with the SEC, go to the DOJ and say, this is a problem. They're not turning over the bond schedules, which means there's no way to track this from the Q-steps. This is all the case that we've got lined up on mockingbirdproperties.com/DCAD. No bond schedule, no sources and uses, no amortization schedules, no compound cumulative effect of the cost of raising the bonds. Where are the performance? Where are the spreadsheets? Where's the analysis? No audits. They claim that they're doing audits on the school districts. Those aren't audits. Audits involve forensic accountants, certified fraud examiners. So the accountants simply say, well, we're looking at what it is we were given. Well, that's not an audit. So when you start stacking all these problems, it's not the idea of the bond raise is the problem. It's what is being represented as part of the bond raise. And then it gets worse when you realize that they use some of this money on the 313 agreements, which are the solar fields. And I don't know if that's the case in Rockwall or not, but that problem is across Texas. Anybody that's involved in these 313 agreements, then you get in under the hood of your own documents in Rockwall, go and find the investment pools. Ask the board, what is this investment pool? Who's participating? What's the tenure? What's the payout? What's the rate of return? Who's running it? Which underwriter is running it? So the idea that somebody says, well, we're raising bonds, that's not the point. The point is, what's the data under the hood to support raising the bonds? And was the bond that is being presented to be raised in the method that it's presented, is it legal? Does it match and conform to the law from which bonds are required to be raised? I think what you'll find is exactly what we have found, which is no to everything, that fraud is being committed straight across the board.
Yeah, that's the only uniform and equal thing is the fraud. It sees no faces, political affiliations, race. And last thing, guys, here is the Facebook group. And I've been, honestly, if I don't send out a video in the evening, it's because I'm on this group or I'm attacking some politician or some mayor in some town that I found out is committing fraud. So this is where it all stems from. Abolish ad valorem property taxes, Texas Horse Barn. This is a Facebook group. This is where we go to talk about abolishing property taxes. A lot of people in here, about 13,000 people. Doc Chambers joined for governor. Golly, I just got to tell you guys, man, I'm just waiting for people to step. I'm not even waiting for people to step. I'm telling them, reach out to us. We'll help you. But either way, I appreciate you guys. Everything is going to be chapter. We talked for 2 hours on Saturday. Do me a favor. After we're done with this, first of all, go to that Facebook group so I can accept your member request. Go to the Facebook group now. I will accept that. And 2 hours, guys. We talked for 2 hours. If you like us doing this on Saturday, I like the Saturdays more. If you like us doing this on Saturdays, let us know as opposed to Friday. So if I would prefer to do a Tuesday and a Saturday, Tuesday is one day into the week, and then Saturday we can just be calm, talk to each other about whatever. Nothing is rushing us. We don't got to go to work. Nothing. It's just peaceful, quiet, one-on-one, kind of one-on-one in my head, right? In my head. Let us know if you guys like this. I enjoy the Saturdays, and I enjoy the longer time to talk to you guys. I like going off subject and talking about things that you guys like to talk about. So let us know as soon as we're done here. Go in the comment section. Let us know how to improve and the days and times, and let us know what you're learning. And you guys take the quiz. All right. Please take the quiz. It took me a long time to make that quiz, and read the one-page document. Go to realestatemindset.org right now. Take the quiz, read the one-page document, and also know this: I love you. I appreciate you. You are important. And other than that, if you guys are out there investing in real estate, you guys already know we wish you luck, and we hope you win. Thank you, guys.